Hello everyone, Paul Lizell with REO Auction Academy here. And today I'm going to give you an update, basically what's going on in the economy, what the job market's looking like, what the unemployment is looking like, how many companies are cutting jobs, so on and so forth. I want to dive into the data because this is going to affect real estate and it's going to affect you in the long term here, both with rentals, with fix and flips, and anything else real estate related. But before I dive into it, guys, make sure you click on subscribe to the channel and hit the bell icon so you can get notified anytime we create new videos. We're doing at least 2 weeks right now. We're looking to get up to 3, and potentially we're gonna have some weeks here where we get 5. All right, so let's dive into the numbers now. All right, American Airlines is gonna be cutting 19,000 jobs this fall here. 19,000, that's a pretty substantial cut. Okay, the airline industries are obviously taking a bath right now. Great time to fly because of the costs. Yeah, it sucks to have to wear the mask, but great time to fly. I'll be flying a couple times here in the fall. Looking forward to the really inexpensive flights and costs here. Capital One has been cutting credit limits on people, right? So keep your eye on that, depending on where your credit is. They're cutting credit limits. So you're going to start seeing more and more of the credit crunch coming in here. We're already seeing it on the mortgage side. They're making it harder to refi and adding costs on the refinance here as well. Weekly jobless claims, most weeks have been over 1 million. I think last week was around 879,000 or so, but most of them are coming in right around 1 million still each week here. And of all the jobs cut in the coronavirus time from March to May, about 1/3 of those jobs may have come back. About 2/3 looks like won't be back potentially. MGM Resorts is laying off 18,000 people amid a slow comeback for the casinos, which leads us to Las Vegas, which is down 61% from a year ago. Not much longer they're going to be able to last if they keep having numbers like this. Coca-Cola is even getting hit here. And what they're doing is they're restructuring their workforce, and they're looking for people to voluntarily job cut. I don't know how many people want to do that, but their global severance job cutting is expected to cost them somewhere between 350 million and 550 million in severance packages. Pretty substantial number. Right now, 40 million Americans are at risk of eviction. And eviction is not just renters, right? But a lot of the eviction is people who are foreclosed on that will be evicted from their homes as well. Fed's likely to keep interest rates near zero for 5 years, according to their last meeting here. And now we'll get into malls. Malls have been a dying breed for years, right? With Amazon, with online shopping. But 25% of malls are expected to be gone in the next 3 to 5 years. That is pretty substantial, but not unexpected. My thought on malls, what they could turn them into right now, what's popular is these promenades you see with housing above and the shopping down below, where you basically have built-in customers to your businesses. I wonder if they can do something like that with the malls. Again, you have to change the zoning, obviously, because they're instead of retail, you're going to have to make it some kind of combination there. But if you build some housing in around it, above it, inside of it, however you do it, it could be pretty creative, and you could turn some of these malls into potentially some living areas here. Nordstrom sales have fallen 50% over year. Right now, more than 16 million of the US population is out of work. This is a staggering one. The number of homes with mortgages 90 days or more delinquent rose 376,000 in July to a total of 2.25 million. That's pretty substantial, guys. That's a big number. JCPenney, 70,000 jobs are at risk right now of being cut because their sales, they were looking to sell the company. The sales stalled, and it's probably going to end up going bankrupt. And that's a 118-year-old company. So that's pretty substantial to us here. Ford is cutting 1,000 jobs. And right now we're obviously, the dollar decline is in full tilt right now. And this may be temporary, but right now it's down 10% from its 52-week high. I do expect it to rebound. The dollar will gain strength just because the other currencies are in shambles as well. But this is all going to affect real estate, guys. You're looking at this, it's important to know this information. I write this down. I try to relay it to you guys because what you see today is a 6-month effect down the road. We're going to be seeing a 6 months effects here and a year and 2 years beyond that. We're going to see some really staggering numbers. We're still expecting to see huge foreclosure numbers here. Yes, I know they're putting moratoriums. I think HUD put a moratorium to the end of the year, and CDC is trying to put a moratorium on evictions. CDC doesn't have authority, guys. They are not, they can't make laws. Okay. This has to come from Congress. So people still can take people through and evict them. So this means nothing. This is just a bunch of garbage as far as I'm concerned with the CDC. They don't have lawmaking capability. They're just a arm of the government. Anyway, I want to give you that update. Know that real estate prices at some point, when inventory starts to tick up, will start to drop down. Hopefully it won't be a real quick, drastic drop, but they will start dropping, and there's going to be great buying opportunities here in the near term. All right, guys, hope you enjoyed this video. Hope you got something out of it here, and we will catch you soon.